Welcome to the Middle Tech Podcast, this region's leading business podcast shining a light on technology, entrepreneurship, and the future of business in Kentucky and beyond. Our goal is to advance the ecosystem by bringing attention to the founders, changemakers, innovators, and those supporting them. Middle Tech's content can be found on your favorite podcast streaming app, social channels, and YouTube. We encourage you to follow and participate in the conversation. Let's discuss and build the future.
What's going on, guys? You got Evan Knowles and Logan Jones here at the Middle Tech Podcast. We just had a conversation, and I was taking notes the whole time. So Andrew Goldner is the founder and CEO of GrowthX. They are there to serve founders and provide some funding, and their specific domain is go-to-market strategy. So they're helping founders with the go-to-market strategy. And we just sat down and talked about what that means and some of the particular subtopics around go-to-market. So this really resonated with me. My background is sales and go-to-market. And so I just really respected the amount of expertise and knowledge and wisdom specifically this man had. So he's worked with numerous companies from Silicon Valley. He was part of the early team at Thomson Reuters. He's worked on Salesforce. He's worked for companies acquired by Google. So this guy knows exactly what he's talking about and had some really great points throughout the conversation.
Yeah, and if you're wanting to learn more about sales and marketing, this is a must listen for. Evan just mentioned it. He was literally taking notes on his company Miro board as we were talking to Andrew here. And it was one that, as I was listening to, I was like, there is so much packed into this. I'm going to have to go back and literally take notes for myself that I can go back and apply to the startup I'm working for right now, because so much of what we talked about here is a lot of my job. So there are some questions that were just genuine questions that just popped into my head that I plan on going and applying directly to the job that I do. So, we discussed things like why go-to-market strategy is front and center for early stage businesses versus, product development. We dove into specific subtopics with that go-to-market strategy. And we also discussed what is going on in Nashville in relation to their technology and startup scene. That city is just absolutely exploding right now. We've got all sorts of friends that are moving down there. We enjoy going down there for the entertainment side of things, but there's also this really flourishing and emerging technology and startup scene. So Andrew is a great guy to talk about all that. He's got lots of experience working with companies down there in Nashville, and we're really looking forward to you guys listening into this. So if you guys get anything out of it and you feel like sharing it with us, we'd love to hear what you guys learned from this episode. But we're going to go and dive on in. We're excited for you guys to listen.
Let's go.
All right, guys. So before we dive into these interviews, we just want to take a second to highlight our sponsors that are going to be sponsoring season 4 of the Middle Tech Podcast. So the first one we want to go over is Betterment Corporation. So they're going to be sponsoring, like I said, all of season 4, and they're working hard to bring sustainable developments to Eastern Kentucky, places that need it so badly. What they're doing is taking old and abandoned coal mines and strip mines and putting sustainable businesses in their place that can help support those communities. So definitely go and check them out. Their website is landbetterment.com. They're doing some awesome things in this region.
Yep. Next, we've got Brandon Johnson. So I've personally worked with Brandon Johnson. He is a lawyer and attorney that works with businesses, specifically startups in this region. He is from Kentucky. He's from Fordsville, Kentucky. He got his law degree from the University of Louisville. He's worked with Papa John's, Louisville Slugger, Instagram influencers that are making millions of dollars, real estate investors, you name it. But he loves what he does. He really loves helping small businesses, helping entrepreneurs get the right footing, because one of the most important parts of starting your business, if you're serious about it, is getting an attorney, making sure that all of your documents, incorporation documents, operating agreements, shareholder agreements, things of those nature are in check. And Brandon is there to help you with that. And again, I've worked with him and he does a great job. He makes it fun. He's very personable, and I enjoyed working with him. So we appreciate him for sponsoring this season.
All right, go ahead and dive into it.
All right, everybody. Thanks for joining us. You've got Evan Knowles and Logan Jones here with the Middle Tech Podcast. We're excited for our guest today, who's actually down in Nashville. So as we talked about in the intro, we're trying to expand, our presence here in this region of the United States. And so we're starting to get more guests, outside of Kentucky, but we always want to stay, near to Kentucky. And so today we've got Andrew Goldner, who's the CEO, co-founder of GrowthX, and he's wearing an awesome pullover right now. Welcome, Andrew.
Thanks. I am grateful to be here and super excited about our conversation today, guys. Looking forward to talking with your audience.
Yeah, we really haven't sat down and had a go-to-market specific conversation, which is going to be the bulk of a lot of what we talk about today. We've talked about product design. Obviously, we've talked about just a high-level overview of starting companies with so many entrepreneurs. But I'm really looking forward to diving into just the go-to-market and the sales and marketing side of things.
Yeah.
That oftentimes, founders are more technical and they don't have that kind of background. And we're looking forward to sharing that wisdom that we know you have. So before we get into any of that, let's jump into your background. So give us a brief overview of where you're from, your education, and any kind of professional background you want to cover up until you started GrowthX.
Yeah, thanks, guys. I grew up in Cleveland, Ohio, very proudly. I like to say that since leaving Ohio, I haven't lived in a normal place since moving to Nashville. I went from Ohio to Washington, D.C. to New York City to Hong Kong to Singapore to Palo Alto to Nashville.
Wow.
And so everything between Ohio and Nashville, I consider non-normal. And so I'm super happy to be in Nashville for sure. I've been involved in technology for over 20 years. So some of the gray hairs you're seeing, I've earned them. I started out my career as a tech lawyer and just got super lucky just to be in the right place at the right time. This was the mid 90s when the internet was first commercializing. And, I certainly didn't know anything about being a lawyer, but I knew how the internet worked. And that made me an outlier from just about every other attorney at my firm, especially the partners. And I just decided I wanted to make a career focused on technology. And so I just leveraged, that understanding into a practice where 100% of what I did as an attorney, whether it would be M&A or corporate finance or licensing work or just general contract work, was all around technology. And that took me inside of DoubleClick. So while I was an attorney inside of a large firm, I've worked at and for many of the early internet pioneers, including Alta Vista and Priceline, back in 1999 when Mark founded Salesforce. And then when I left the firm, I went into DoubleClick, one of the early ad pioneers. And when we got acquired by Google, I joined the Thompson family in Canada, the wealthiest family in Canada that owned a significant number of assets, but had been really operating them as more of a portfolio as opposed to operating entities. And so when I got involved, I got dropped into Thompson Financial, doing sophisticated fintech transactions as the company was really accelerating, starting to operate a lot of their different entities together. And I was fortunate enough to do that for a few years when a few of us at the company had the idea to start our own news business rather than just license that news business from third parties. And so we created what became known as Thompson Financial News. And after a short while, the company and the Thompson family realized that this was going to be important and bought Reuters. And so when we became Thomson Reuters, I was fortunate enough to become publisher of Reuters News. One of the more amazing opportunities I've had in my entire life. I consider those journalists to be the best in the world, and I've been privileged to get to know some of them. That journey also is what took me out to Hong Kong and in Singapore. And after about 7 years, I decided it was time to get back to the United States. A lot of Facebook photos that we weren't in with the family. And I also just wanted to get back to the early stage. I really missed the early technology stage, the early product stage, the early company stage. And so moved back to the United States, and instead of returning to New York, went to Silicon Valley. And it was along that journey that, I realized some things and had some ideas and met some people and joined a bunch of company early stage, started my own company, what I call an expensive learning opportunity. And it was really that journey that I was blessed to meet my now co-founders and start GrowthX.
Very cool. Awesome. So let's dive in a little bit to what GrowthX specializes in as we kind of talk about more of this go-to-market strategy.
Yeah.
So when we got on the phone to talk about GrowthX and what you guys are doing, you talked a lot about, demystifying venture capital. So talk a bit about what GrowthX is and how you guys are working to do that.
Sure, sure. I mean, we are a venture capital fund, and that's our primary purpose. What's very different, though, is how we go about practicing it, how we interact with founders, and primarily how we go about finding and qualifying great deal flow. I like to say that what Mark Benioff did to on-premise software, I'm trying to do to the demo day. It's become a bit of theater, and there's the flowery narrative and the top-down view that a pitch deck will provide. But as it turns out, helping someone is an extraordinarily powerful form of due diligence. And so we've figured out how to do that and now how to do that at scale. And so there's our tagline: founders find product market fit, and we find qualified investment opportunities. Tongue in cheek, I refer to it as the only form of legal insider trading in America.
That makes sense. That makes total sense. And when you got on the phone with us, you told us a story, the millimeter story of
the nilometer.
Nilometer.
Yeah.
Totally butchered that.
Yeah, that's okay.
That pronunciation. Talk about that, because I thought that was a good story that can relate to how people view venture capital today.
Sure, thanks. And obviously, I'm going to do a bit of generalization here, but I've got venture capital colleagues around the world who are just amazing. I'm also privileged to be a member of the Kauffman Fellowship. And for me, that's a community of over 500 venture capitalists around the world who practice not only best of class venture, but also behavioral fitness. They are really ushering in a whole new generation of leaders in the venture capital profession that not only are pushing the asset class forward in terms of performance, but primarily because the behaviors of the VCs we think are changing. So certainly don't want to suggest that we're out there all alone, doing this, as a party of one. The nilometer story is a story that I tell when I run a popular series of venture capital workshops, or including at Vanderbilt University, here in town. The nilometer, I usually flash a picture of the nilometer up on the screen to whoever it is I'm presenting to, and I invite anybody to call out and tell me what they think it is. And we get a really fun conversation about what it is and what it has to do with venture capital. And what the nilometer actually is, it's the Nile meter. It's a meter stick, a ruler for the Nile. In ancient Egypt, on the banks of the Nile, there were beautiful buildings that were religious. They were temples. And because they were temples, only the religious class was allowed inside them, the priests. The priests were the ones that had the knowledge. The priests were the ones that had the access to education. And according to the priests, they were the only ones that had access to God. And it was through that relationship that they were able to predict for the people of Egypt whether there would be essentially feast or famine. And they controlled the people by doing that because they appeared to be wise. They appeared to have the insights from a deity, because they did a pretty good job relative to the average person of predicting feast or famine. And so, as it turns out, what they had was data. It was kind of the early data informed decision making, because inside of that fancy building that they called a church and cloaked in the garb of religion was the nilometer. And it was just a huge column that went very deep into the earth. And over a long period of time, the priest class that had access to that temple was able to measure the relative rise and fall of the Nile. And because they had that data at the time, of course, they were able to better predict feast or famine just based on what they had seen in the past and what they were currently seeing, and extrapolating that information. And the reason I love telling that story is, for such a long time in my profession, I feel like we as VCs operated very much like the priests. We joke, right? We've got our Patagonia vests, and the priests cloak themselves in clothing that nobody else had. We have fancy buildings on Sand Hill Road that are hallowed in the profession with expensive art on the wall, and not everybody is allowed inside. We use terms that sometimes feels like are meant to purposefully obfuscate the truth, right? what does non-participating liquidation preference mean? Like that is a non-English word. And why is it that a founder from Nashville needs to hire an expensive counselor to sit between themselves and their funder in order to understand what the funder is saying and what their rights are, right? And so if you look back into the Nile River area in ancient Egypt, those priests used terms that were meant purposely to obfuscate, and they did that to maintain control of the people, to protect their own power. And so this idea of all of a sudden the trend where VCs need to be more founder friendly, it's just something that we object because of the underlying premise. It is a partnership from day one, and when you behave in a certain way, and when founders need to come to you and beg time on your calendar, and when you disappear into the room every Monday with your partners and have your hallowed partnership meeting, and afterwards come out with a proclamation about who gets funded and who doesn't, with a simple email to a founder that says, "We pass," and you load up your term sheets with non-English terminology that a founder has to spend money to hire someone to translate, well, what do you expect is going to happen? And so, again, we just reject that. One of the things that we've always done at GrowthX is, rather than that partner meeting I referred to, a common practice in venture capital, we actually just invite the founders into the conversation and we make the decision in front of them. We talk about them like they're not in the room, right? And one of the things that makes sure that we do, and it holds us accountable for, is it makes sure we're not having any conscious or subconscious bias. Because if that's happening, we need to be called on it, because we're learn-it-alls and we're trying to be better. And so by having the conversation in front of the founders, it forces us to make decisions in ways that ought to be defensible, that ought to be based on things that are good logical sense. And so we don't meet in private and then declare in public. We just talk out openly with founding teams, and we decide together whether it's a good fit or not.
Yeah, I love that. That's I think pretty much everyone can appreciate adding more transparency to an industry that a lot of people, like you mentioned, are going to view and hear all the words and see all that goes on, just think this is above my head. This is not something I can break into, whether you want to break into the funding side of it or whether you're a founder, a first-time founder maybe, who's trying to understand all the jargon and everything that goes into it. So I think that's a great analogy. Let's talk real briefly here for a second about what's the state of venture capital in America right now, and then in Nashville specifically.
Oh, I'm excited about it. I mean, writ large, and by the way, not just in America, we're highly active globally now. We can get into that later if you want, but we can share a perspective that's not just the US, not just Nashville. But in that context, yeah, I'm pumped. I mean, especially for Nashville. We have, amazing folks that are moving here every day, and adding to the amazing folks that we already have here. You already have a strong, history of great investors here in Nashville, primarily in health tech, but not exclusively. But we have a rich history of great investors and great founders in Nashville that way. And to add to it, we have great people moving here all the time. Third Prime, Wes Barton, just moved here from New York City, a great SaaS investor, who chose for the right reasons to be here, and is now spending his time and his resources building relationships with founders and earning the opportunity to make more deals here in Nashville and, of course, around the Southeast. And that's just one of many, many examples of how Nashville is attracting people for the right reasons to add to what was already awesome here and bring about a venture community that's focused in it beyond the successes that we've seen in health tech. You have Jane, the new CEO of the Nashville Entrepreneur Center, who's just taken that organization to another level. bringing founders who have never stepped foot in that building into that building, bringing not only founders at the early stage, but she's bringing in, as she herself is, highly successful founders who have built and sold companies, who can be a resource for each other and then also be a resource to the founders that that organization serves. And really, I could just go on and on. I think obviously with COVID-19 and now COVID-20, the profession, like any profession, has had to adapt. The 44th investment that I made, I've to this day never met the founder. That's a radical thing for a VC to say. Yeah, there was a whole lot of Zoom calls, but I've never spent personal time with that founder. We have no qualms with that. I think more VCs are having to adapt. Early on in COVID, I saw a lot of really interesting conversation among my Kaufman colleagues on the different chat sessions that we're privileged to have access to, and the virtual sessions that we had in 2020, talking about that. What does due diligence mean when you can't spend time with the founder? What kind of conversations do you have with your limited partners who are looking you to deploy capital in a certain period of time to return that IRR that's best of class in a situation like COVID? And oh, by the way, to take a term that Jeffrey Moore popularized in Crossing the Chasm, the early adopter, what we've seen and what we've coined is the early adapter. We've seen the rise of the venture class. We've seen the rise of the founder class because, listen, in times of crisis, entrepreneurs rise to the challenge. It's just a part of our DNA. It's a part of having an abundance mindset and not a scarcity mindset. Where most people see a challenge, we entrepreneurs see an opportunity. And so I think, after the initial shock at the early part of 2020, founders and their partner funders reacted, and we've seen venture not only just continue to be active, but in fact see brand new opportunities and brand new paths to huge scalable growth because of the behavior that we're all now adapting to in the new kind of real world.
Yeah, love that insight. And we'll get back to Nashville specifically and dive deeper into that there towards the end of our conversation. But let's transition from venture capital more towards go to market, which is what you guys are really helping these companies you're investing in achieve. Is their go to market strategy? Talk about from a high level, what you all do with these startups and their journey. You don't have to go through the details, but from a high level, what does it look like to engage with you if you were to invest in a startup?
Sure. Happy to talk about that. Maybe we could just spend a couple of minutes first talking about why we think it's important, if that's okay.
Yeah, for sure.
We now live in the age of applied technology, right? This is what Mark Andreessen was referring to when he said that software is eating the world, right? Now that technology has become so much cheaper and so less complex, and so many more people know how to build, it's no longer the focus primarily on the creation of technology, although of course that's still happening in abundance. But what we've seen is a transition from a focus on the creation of technology and the funding of prototypes to the application of existing technology and the fit into the market of that technology. But here's the stark reality, guys. In Silicon Valley and in many ecosystems around the world, if you know how to build products and you start a company, you're known as a founder. But if you know how to sell products and you start a company, you're known as a non-technical founder. And it's meant, no mistake, it's meant as a second-class citizen, a second-class status of founder. But again, how does that make sense? In my world, it ain't dog food unless and until I see a dog eating it. And only then does it become dog food, right? Nothing happens until someone sells something. Take a look at over the last 30 to 40 years and the revolution in go-to-product, Why do we live in the age of applied technology now, right? Because of what has happened over the last 30 to 40 years to enable go to product in a way that was never existing before. I challenge you guys to name the Ruby on Rails of market development, or point out to me the GitHub of sales, or the Heroku of biz dev. And for the global proliferation of product development boot camps and computer science degrees, again, I challenge you, name a single market development boot camp and a single sales degree. They just don't exist. Very few colleges and universities in this country and elsewhere not only don't have sales degrees, including at the MBA level, they don't even have a single course on sales.
Yeah.
And yet, we scratch our head in wonderment why most founders are failing, because they're building shit people don't want, right? And so why are we doing what we're doing? It's because nobody's done it before. And so we've just simply taken the same approach that engineers have done to usher us into this amazing age of applied technology, and we've applied it to go to market, right? We've codified the path to product market fit, because as it turns out, products and markets may be unique, but the path to finding product market fit is not. It's a formula. And by the way, we of course did not invent it. What we're talking about is something that's existed long before us, right? The commercialization of a product is as old as business. But because we are not teaching the founders and we are not enabling them to go to market with a structure and a framework and a common language that we know exists in product development, well, of course, they're going to improvise. They're going to wander the desert. Innovation belongs on the product roadmap, not the market development roadmap. And the last point I'll make there is the single largest educator and supporter of founders in this world today are these accelerators. And there's thousands of them. But they teach founders how to raise money, not how to make money. They equate investor readiness with talking to a VC, when investor readiness is the natural byproduct of talking to a customer. But again, if you're not taught to do that, and the final point I'll make as I get to answering the question you asked me, is take a look what's happened over the last 10 or 20 years with digital marketing. If you are either selling something that's B2C or one of your acquisition channels is digital marketing. Google Analytics, just by example. Google Tag Manager is so easy, even I can use it. I can drop in my Tag Manager and I can flick on a Google Analytics tag, a Facebook remarketing tag, LinkedIn remarketing tag, dozens and dozens and dozens of cookies that I can drop in there. That enables me in real time and for no charge, Google will show me rich infographics, analytics, and insights, allowing me to slice and dice and understand of all of my customers, who are the customers that I want to try to go get more of, because they were easier to get to my website. My message, their problem, was connected easily on an advertisement. They came to my website, and with conversion rate optimization, I could bring them through my funnel. I could show the customer journey. I could highlight the areas of friction, all through this rich analytics. Well, guess what? When you're talking with humans, there is no Google Analytics, but the process can be replicated, and in the need to understand who your best customers are and what their characteristics are and what the message is for them and the customer acquisition channel for them and the customer journey for them, there is a way to do what we call digital analog growth hacking, which is to set up the systems and the behaviors and to interact with the market with intention. So no, there isn't a Google Analytics that's going to do it for you, but you can just for free open a Google Sheet. And if you understand how to interact with the market and you train your signal to pick up their signal, and instead of leaving it in your head or in your email box, you put it in a Google Sheet and you organize it and you analyze it and you come up with insights about it in the same way you do with Google Analytics, well, lo and behold, things start getting better, things start getting easier, things start getting more predictable, things start getting more profitable. And so this is really what we've brought to it is we have taken that path to product market fit and codified it and given it a common language and a structure and a framework and a set of enablement exercises where founders apply in real time what we're helping them do to take that path to product market fit and find not product market fit necessarily, but always the truth. And so there's a few different ways that founders work with us. We're about 6.5 years old as a fund. And for the last about 5 years, the way that founders would work with us was after we invested in them. So we built our market acceleration program, which is that codified path to product market fit. And we put it inside the fund and we put it behind our investment and not in front of our investment. And therefore, it was like a reverse paywall. We can't help you until we give you money. And that's where our hypothesis was, because we wanted founders that were interested in not just our money, but they wanted our help, right? What we're looking for more than anything are learn-it-alls and not know-it-alls, right? You can't help a know-it-all. And so when someone raises their hand and say, I'm setting my ego aside, I'm oriented towards winning, what you're talking about is something that I'm relatively weak on, and I would like your help doing it. Now we're on the track to a potentially good investment. And that market acceleration program, again, for all that fancy terminology, effectively it was like a human consulting firm inside of a venture capital fund, right? And as you guys know, carbon-based life forms are non-scalable. It's just an inherent problem we have. And so even though we're proud to have our 44 investments across 2 funds and proud to have had 5 exits so far, 44 is a relatively low number. And when all you're relying on is a bunch of humans to work alongside other humans and help them, well, again, unless you're interested to hiring hundreds and hundreds of people, and now you're in the agency problem, right? More founders to help, so need more people. Have more people, so need more founders to help. No, thank you. And so, again, it's something that we continue to operate. We operate it very successfully. When you get an investment from GrowthX, you're invited to enter the program, and it's a highly structured program. And by the way, we do not get additional equity just because you're allowed to tell your friends you're in our program. No, we're only ever getting additional equity when you and your stakeholders believe that our help has helped you become more valuable. And then and only then do we unlock additional equity. And that keeps all the incentives aligned, because guess what? Yeah, that means a founder could take advantage of us, right? They could come into our program and into our portfolio, allow us to help them, and never give us additional equity. But our view is we don't want to own more of a company that's run by people that behave that way, because we think ultimately they're going to be failures because they have that worldview, which is violent to our worldview. So we're already on the cap table. We wish them success, but we're not going to spend our time with them anymore. And by the way, we're certainly not going to follow on with any additional capital. And so it operates differently than most, quote, accelerators. We don't operate in batches or cohorts. We work with you one-on-one. There is no fixed period of time. We work with you as long as it takes to find the truth, because where we sit is between seed and A, right? We help get you to that point where you have product market fit. And we're one of the few people who define that, right? You get to product market fit, which is still where the Series A is now interested in beginning to invest. And so that's the way that we've historically operated our market acceleration program. And it's available again to folks that are already in the portfolio. And then about a year and a half ago, we really turned our attention, our time, and our capital to try to do something bigger. Like the founders that we serve, we entrepreneurs, we also have a big, hairy, audacious goal. We want to help every founder in the world. And yes, in the process, we want to also earn deal flow with a strong source of signal from other founders in the world. And so we created an online version of our program, and it's called MXP Online. And that's where we've now gone global, because now that we have silica and not carbon, right, where founders can help themselves to our expertise, and we now have a digital window to peer through to verify the behavior of the founders at Learn-It-Alls who are making a priority of go to market and not just go to product, and where we can see how the market is initially responding and whether there is that early sign that might lead to product market fit. That's the source of signal. And that's where we and the venture capital partners that we have around the world invest. And so MXP Online is not only available to every entrepreneur in the world, but it's now also available to the organizations around the world that support founders. And that's, of course, enabled us to go from one to few to one to many. And those are governments, NGOs, private organizations, you name it, who share our worldview, and who don't want to reinvent the wheel, and who use our codified path to product market fit to help their founders. And again, every time they do, a little digital window opens up that I can peer through and trade on the only form of legal insider trading in America. It's just that simple.
Makes sense. And what you said earlier really resonated with me for a couple of reasons. What you were saying was, the go-to-market versus the go-to-product. Right now, I'm starting a company myself, and what you're saying about the go-to-product becoming, much, I wouldn't say easier, but much more clear for founders, and especially, engineers and developers. We're using so many developer tools like Twilio and, MongoDB, these traditional developer, these stacks that people used to have to build from scratch are now, APIs, which is amazing. And so we're able to move very fast and iterate and listen to customers and adapt because of these awesome tools they're able to use. And so that's something I resonated with. And then the other thing you mentioned that I really resonated with, especially here in Lexington, Kentucky, because this is a struggle for so many startups here in Lexington, is finding that talent that's able to help you go to market. The SDRs and the people that are able to grind and help you understand your customers, because that's just not, like you said, taught. And so, I've had discussions with people around here on starting, a sales boot camp. I've called sales boot camps in this region. Up in Indianapolis, I called one and was just on the search for these boot camps because they don't exist. There's plenty of developer boot camps, but there's no, go-to-market or sales boot camps. And that's what a lot of startups are struggling with around here. There is technical talent building products, but then once they get to a certain point and the product's built, they're looking around and they're having to hire people out of university and train them from scratch.
And exactly, you're absolutely, and it's not just Louisville. It is, and I'm telling you, we have conversations everywhere around the world, every single day. We're talking to founders in the organizations that support them in Beirut, in Cairo, in Kosovo, in Palestine, in Israel, in Lithuania, in Singapore, in Kuala Lumpur, in Brazil, and I can just go on and on and on. And it's the same story everywhere. And a thing I'll go back to as well is, even SDR is stage relevant if you're pre-product market fit. The very definition of SDR is scale. You don't hire an SDR unless you have something that is scalable, because that's what an SDR does. You, as the founder, are the ones that are speaking with the customers, and you're not doing 3-minute quick pre-qualification calls Listen, I remember Aaron from my Salesforce days. Aaron's the one who invented SDR, Aaron Ross, predictable revenue. And even Aaron will tell you that it's changed drastically. But even when he created the SDR for Mark, they had something that was revolutionarily scalable, and he needed to bifurcate the sales process so that salespeople weren't qualifying, they were selling. And so, how do we build a qualifier? And that's the SDR. But you don't want to be having 2-minute qualification conversations when you don't have anything scalable. Learning precedes revenue. So get back to your question about actually how we help the founders. Well, this is one of the primary ways is, and part of it is our fault, the VCs, forcing scale down the throats of founders way before it should. Learning precedes revenue because not all revenue is created equally. You want to be doing things that are intentionally purpose-built to not be scalable. We have a blog post on our website that I encourage everybody to go grab, which is basically every software company on the planet, pre-product market fit. The acronym SaaS actually stands for service as a software, not software as a service. You want to be consultative. You want to be high touch. You want to be non-scalable because you haven't sold customers at that stage. You've brought on early partners who know that what you have is not whole and complete and that are there to work with you to discover product market fit. That's what early adopters love doing. And so you want to be in there with your hands and your sleeves rolled up. I have so many founders that are either pitching me or working with me, and they're so shy about their non-SaaS revenue because all they hear from VCs is we'll give you no credit for your non-SaaS revenue. You need to be $1 million of ARR in SaaS revenue to qualify for Series A. First of all, as if the amount of revenue you have has anything to do with product market fit, it's one of the leading indicators of a false positive of product market fit. Just thinking that $1 million or 500,000 or some amount of revenue equals product market fit, when that revenue might be entirely unprofitable and never profitable, that's not a path to product market fit, right? That's a path to a Ponzi scheme if you're not careful, right? And so what we help these founders understand is at the earliest stage, you actually want to be involved. When I meet founders, as is often the case, that had a consulting type of business and now they're going to layer some software on top of it and become highly scalable, I love it. I want them to keep being consultative. I don't want them to shutter that consultative business. I want them to keep doing it because they already have that consultative mindset, whether they know it or not. They're actually better suited to understand how to find product market fit than someone who hops right into software and just starts thinking about scale and the 90-some% margins of SaaS. And so even with the SDR, like absolutely, Louisville and everywhere, Nashville, other places could use more people trained up on more of those roles that can help a highly scalable organization achieve its objectives. But you got to first determine whether you've got something that's highly scalable. And of all the potential customers in the world that could benefit from what you're doing, there are a few, a subset, where the characteristics and the behaviors will make it relatively more likely that you will have a higher likelihood of winning a higher amount of revenue. Let's dial all our energy into identifying that and then only scale in that direction. So I tell my founders, if your total addressable market was the periodic table of elements, our goal right now is to identify the subatomic particle of one of those elements. That's where the journey begins. So anyway.
Makes sense. And, I've experienced that before. At Fuji, we thought we had this go-to-market fit. We raised $2 million and we hired a lot of salespeople with no data. And what happened? Well, we ran out of money because we went to market hard, very hard. We opened an office in Los Angeles, very expensive to do. We thought we had this fit. We hired a lot of salespeople, didn't have it, ran out of money. So
You got it. I mean,
I've been right there.
and you know it. And listen, I don't know if it's going to make you feel better, but you're not alone,
Yeah.
right? You could join a large group of founders in this world who will admit. And by the way, the reason that mistake is so often made is because it's a very logical thing you did. What you did, if you haven't been trained on understanding how to bring innovation to market, your decision makes all the sense in the world. Of course, that was what you would do. You're starting to do something, and what do you need? You need more people to sell it. So you bring on a bunch of salespeople. The problem is it's stage irrelevant salespeople. For you in the audience, if you haven't read Mark Leslie's seminal work on the sales learning curve, I encourage everybody to do it. It'll take you no time. Google Harvard Business Review, sales learning curve, Mark Leslie. Mark's the founder of Veritas Software. He pioneered the notion of the sales learning curve. And what he calls the Renaissance rep, we call the market developer, which is why we call it market development. And here's the primary difference. Sales, what you guys did is you hired people to pursue revenue for the purpose of profit, but learning precedes revenue. And so market development is the pursuit of revenue for the purpose of learning. And so rather than pursuing salespeople, you wanted to pursue market developers, or what Mark Leslie calls the Renaissance rep. And I'll tell you, you're going to smile and nod your head and shake your head when you read that article, because you're going to see the choices and the decisions and that mistake that you made in Mark's article. And he does such a great job in that article of helping founders understand relatively quickly why you don't want to make that decision. The characteristics, the behaviors, not so much the skill sets and the experience and the customer relationships are what you're looking for at the early pre-product market fit stage. That's what he calls that Renaissance rep, and we call the market developer.
Yeah.
And let's talk about, the base layer of all this, of the salespeople. Let's talk about what kind of traits actually make for people who have that kind of innate ability to be good at sales. What are some traits that you see whenever you're working with founders and with these companies that are doing this well?
Honestly, I'll go back to that one thing that we repeat often is learn it all.
Mm-hmm. Yeah.
Period.
For me,
That's it.
from
Good
my
listeners.
perspective with working at the startup that I'm at, I think the two base traits that, help us with our go-to-market strategy and product market fit is just really good communication on both ends. You have to be able to communicate well with the customer, but you also have to be able to ask the questions to help the customer communicate back just as well with you, so that you can get that key understanding of, what they need and what's valuable to them as you're kind of going down this map. So yeah, that all resonates with me.
One of my dearest friends in the world used to work for the CMO of Coca-Cola, a guy by the name of Sergio Zeman. She taught me something that has stuck with me ever since. And this is something that she learned from Sergio, one of the world's renowned marketers. Everything communicates. Everything communicates. Part of doing what you're talking about is understanding how to pick up the signals that are already being communicated. And part of it is, as a person and as a company and as a brand, know that everything communicates. My definition of brand is promise of experience. That's what a brand means. Everything that I do communicates. Am I communicating in a way that's consistent with the promise of experience that I want people to have with me and my brand? The other side of that is everything communicates to you as well. And so 100% agree with what you just said. If you understand how to have the conversation, by the way, right? It's not about features and functions. It's about people and their problems. So it starts there. No, don't start your call off with your demo. For heaven's sake, no, put your features and functions back in your pocket. I'm not interested, right? If you're interacting and understanding, and you're training your ear and you're coming in with a mindset that selling is helping. That's what it is. The best way to be a seller is to show up as a buyer. And with some training, you can understand how to enable the conversation, right? What I like to say is you send out invitations and you wait for the RSVP. And if you understand how to read between the lines and appreciate that everything communicates, you can pick up the signals and you can track them back to whether this is someone who's qualified to have your time. Because that's another challenge that many founders make. We feel like we need to qualify ourselves to earn the right to talk to this person. But no, they also have to earn the right to talk to us, right? One of the biggest challenges when we work with founders at the early stage, and this is part of the traits, is they try to solve for the top of the funnel when they should solve for the bottom of the funnel. The whole exercise when you start going to market is about disqualification, not qualification, right? Startups die more often of overeating than starvation, period. And so the trait, as you also said, right, is understanding how to listen, understanding how to engage around problem, which is called design centricity, design thinking, right? Engaging in a way that enables you to think about whether this is someone who you should be working with right now. It may work, you may work with them later, but it's about right now, right? We teach our founders that when you're doing sales at the early stage, you're not looking for Mr. Right. You're looking for Mr. Right now. And that doesn't mean you delete people from the database. It just means you put them on a different kind of campaign. And instead of trying to attract them now, you're trying to nurture them later, which is why it's called an attraction framework and a nurture framework, right? People who are setting aside their ego, people who have an insatiable curiosity for learning, right? People who have an appetite for risk, people who have an appetite for uncertainty, people who like creating the playbook, not reading the playbook, people that like figuring out where the process needs to come later, not stepping into something that has a process already. Those are the characteristics of the market developer. Those are the ones that do the best. And if you think about it, it's just the scientific method. We teach our founders that they are business scientists and they have a hypothesis. And the hypothesis comes from their intelligence, their intellect, their experience, their intuition, their relationships. And just like a scientist doesn't walk into a laboratory, throw some shit in a petri dish and wonder what happened. No, they walk in with a hypothesis. And by the way, scientists are not looking to prove themselves right. They're just simply searching for the truth. And so as a founder, you're not looking for product market fit. You're looking for the truth, right? And you want to get there in the most efficient way possible. And so with intention and framework and structure, you form a hypothesis, you run an experiment, you analyze what happened from that experiment, and you make decisions based on that. And just that alone saves a significant amount of time and capital because you're going to market with intent. You're not improvising. And that's really, really, really important, right? You don't ever want to bring emotion to a data fight.
Yeah, that's a good quote right there. So, as we talk about all of these sales and the traits that make for good salespeople, a conversation that Evan has kind of been a good mentor for me as I get into startup sales. He was there when he was younger at Fuji doing the same thing. And one of the things that he's kind of talked to me about is, the importance of content marketing and essentially scaling your salespeople. So talk about what you see the companies that you guys invest in, what the ones who do it well, what are some of the things they're doing well in order to really nail that content marketing strategy?
Yeah, this is one of my favorite subjects. As I mentioned earlier, I was privileged to spend some time as publisher of Reuters News. That's media at scale. During my time as publisher, we produced content the equivalent in length to the Old and New Testament combined every day.
Oh my God.
Every single day.
That's crazy.
That's content at scale. But Reuters is a media company, and they have a massive budget and a history to be a media company. But what I love about your question is something that I've preached since that time, which is the age of information. Every company is in part a media company. And that means that each of us as founders are in part publisher. And so one of the things that we were kind of talking about, pre-recording today was that creation of content, or how do you scale the value you're getting out of the content you're already creating. Content marketing is critical no matter what you're doing, because the role of the salesperson has been shifted to decision time. We are not educating ourselves with salespeople anymore. We are self-educating ourselves. As Clay Shirky, one of my favorite writers about the age of information, has written about and talked about, the aggregation, the dissemination, the creation of information has been made so extraordinary. It's so much easier, for all the reasons we know now, for any one of us to now in part behave like a media company. We're no longer limited by the people who buy their paper by the pound and their ink by the gallon, right? And so all of this, where customers are now self-educating themselves nearly entirely, or if entirely, towards purchase, how are you out there helping? And it's perfect, because it's right in line with what we're saying. Selling always has been helping. How do you help someone accomplish an objective that's consistent and a fit with where your solution fits and helps people, right? And the best way to do that is to put useful information out there for people to nurture themselves. Back to one of the things we were talking about, and very relevant here, the SPIN framework, right? We are massive fans of Dr. Neil Rackham and the SPIN framework. SPIN as an acronym: situation, problem, implication, needs, payoff. The leading reason why conversations end in no and not yes is the salesperson skips over the recognition of need phase, right? And that's because they forget they have 2 ears and only one mouth, right? And Dr. Rackham proved that empirically. And so what content marketing enables you to do is enables you to connect with people who recognize that they have something that they're looking to solve, and sets you up as someone who's in a position to appreciate that and to help them. And then and only then will they begin to search for alternatives, for options on how to solve the need that they recognize they have. And because content marketing, yours, has been helpful, you're in what's called the decision space when they go to solve their problem. And you know what? There are so many ways nowadays to do contenting at scale, for the same reason you were talking about Twilio and MongoDB, or other no-code or low-code tools, and Zapier and Google Drive and GMS and HubSpot. There are so many ways with relatively little effort for you to put out something helpful in a way that enables your customers to nurture themselves towards you, to be able to raise their hand and say, I'm qualified to have your time, founder, because I have this need that I recognize, and I suspect you might be able to help me. Let's have a conversation about that, right? And so, to me, one of the largest mistakes that founders make, and frankly, every company that attempts to do content marketing makes, is they really focus on the content creation. They think the challenge they need to first solve is the creation of content, when the reality is they're already creating content, right? This podcast is a perfect example, right? I'm making a utility recording of this podcast right now. I could take that recording, I could upload it to Google Drive, which costs me no money. I could use the Upworker who I love, which costs me very little money. They're doing something that they love doing. They're making money out of it while being at home and being present with their family. I'm getting the help that I need. I'm not creating a single amount of additional content. I'm already spending this time with you and your audience. They grab my utility recording and they write a blog post about it. 1,200 words, 1,400 words from it. But then what they do is they slice it and dice it down to a bunch of 300 words, because you have snack bites and you have long form. So the 1,400 words is going to have some insight and analysis. They'll add to this conversation some links. We might go in deeper into a specific subject. We might create a whole post about spin framework and what it means to the early stage, giving credit to everybody where credit's due, because the things that we do, we're built on the shoulders of giants like Dr. Neil Rackham. We might take some of these little bites that we've enjoyed today and flip them out as a tweet or create a LinkedIn post. I haven't spent a single extra minute beyond the time we're spending together, but the value that I've extracted from this content is extraordinary. And so the number one mistake I find that founders and businesses make is they focus on creating more content when they're only extracting a relatively small amount of the value of the content they're already creating. It's like the founder who's building something with an engaged audience, and through digital marketing, they're spending all of their money on Google AdWords and other techniques in order to build a large audience. But what they should be focusing on is not a large audience, but a large engaged audience. And so the first thing that you do is you figure out how to get the engagement metrics right. And through that, figure out who the right audience members are to add, so you ultimately end up with a large engaged audience. Same thing, let's extract more value out of the content we're already creating before we go on to create more content.
Makes sense.
Yeah, absolutely.
I got a selfish question here. So I'm personally about to launch a product, in the next, several weeks.
Awesome.
What is some advice for a company like mine to be launching a product and get? So what we're going to do is we're going to get some early signups before the product's done. We're going to show, we're going to have a website, launch a landing page, and we're going to get some early signups and have a beta program. What's some advice to somebody in that position about to launch that landing page to get some early users, and the product, is on the way? Talk about what you see there.
Awesome. And congrats. That's amazing.
Yep.
Really, that's a big milestone. I hope you guys are celebrating and soaking that in, because I know you're going to beat yourself up when you're making mistakes. So when you're doing something that's amazing, like launching that product, make sure you're celebrating. Listen, the first thing I would say is back to that scientist. Do not launch that product. Do not launch that landing page. Do not launch that campaign unless you first have a hypothesis that you have written down about what you expect to happen based on your intelligence and intellect and experience and relationships and judgment. What of all the types of users that might get benefit from that product, which are the users that you think would be the ones that should most likely be interested right now in your product, not your product roadmap? Never sell your product roadmap. Only ever sell your product. And never pretend to be at a stage you're not at. You're just launching your product. You're at the beginning of the journey. You're looking for people that understand that, and frankly are pretty geeked up to be working with someone who's at the stage you're at.
They're an early adopter. You want to look for that early adopter.
You got it. Innovator and early adopter. You got it. So if you haven't formed and written down a hypothesis, then you're not ready, because you are important and your time is important and what you're doing is important. So treat it that way, right? Form the hypothesis so that when you run a test, you can learn from it compared to what you thought was going to happen. And by doing so, rather than a landing page that's useful to everybody, have the courage and the founder conviction to make a landing page that's only relevant to a few, so that it can be highly relevant. And it's not throwing shit up on a wall and seeing what sticks, because I know how easy it is to just launch multiple landing pages right now. It still means that it starts with a hypothesis. And so of all the potential people in your total addressable market, based on what you know now, form the hypothesis of the characteristics down to the customer level, not the industry sector and company level, the customer level, focused on their problem. What's the one where your value statement, your value proposition, and your product, not your product roadmap, would be more likely to be more interesting and more effective right now? And launch your landing page with language geared to that problem and that person. And then measure the results. And stop when you, and by the way, it doesn't have to just be one, it can be a few, right? But then stop and collect the information and determine what you've learned, and now begin engaging with those people. Because what you're doing is called the attraction framework. And all those initial signups is a statement. Remember, you're sending an invitation, and the RSVP from your initial users is, I'm interested, tell me more. That's it. Now you're done. Off the landing page. Now you're onto a different framework. And so all you're trying to do is say, who's the relevant person based on everybody that might be relevant? Who are the few most relevant? You're going to have to exercise judgment here. Who are the few most relevant? Send them an invitation. And when they say, I'm interested, tell me more, start working with them in a way that's highly non-scalable. No landing page, no HubSpot, no CRM, no SDR, none of that. Just consultative conversations and using the SPIN framework to understand their entire customer journey to where they are and to where you are now, how they think about the problem, what attracted them, what they're working on, and is there a way for what you're doing to help them in some, tangible way where you can use it for the purpose of learning, not for the purpose of profit. So again, you don't have to worry about how expensive it was to acquire them or how expensive it was to meet with them several times. You don't care about that because you're not running a formula to show where you're up and to the right and scaled at 9 figures. You're just learning to figure out where you want to dial in and hit the gas pedal.
Makes total sense. I love that advice.
Absolutely. And, this has already been just a wealth of really valuable information. And this is one that I'm going to want to go back and listen to just for my own personal benefit and probably take notes on. But one question we had written down here that it kind of got me thinking about my early days of trying to get business experience and sales experience. When I was in college, I started this little tiny, more of a side hustle, drone company to drone videography and photography. And one of the earliest lessons I learned about it was trying to find what I should be charging for my services. And of course, I was young, a little insecure about what I was doing, and I way undercharged for them to start off. So what are some things that founders can be doing to ensure that they're getting that price that is a balanced price of, providing the value for the customer, but also giving the value that the startup should be receiving?
Yeah, listen, pricing is vexing for everybody. There's no mathematical formula or magic wand. Our definition of a startup is an experiment in search of a business model. And so, part of that is the pricing experiments. There's definitely some structured and well-known ways you can experiment. The first thing I'll say is I'm just going to repeat exactly what I just said. Form a hypothesis, right? So when you're thinking about pricing, there are ways, again, back to everything communicates. What are the signals out there? One of our most favorite exercises that founders most often either don't do or just do in the skim is competitive landscape analysis. Your competitors all over the world have spent a lot of their time and money trying to figure this out. That's one way you can start figuring it out. And by the way, right, what's the number one competitor to every startup? Status quo, right? If you ever try to change another human's behavior, you know that to be true. And so when I talk about competitors, you have to include their current behaviors. So if there is a recognition of need that they are trying to solve right now, how are they doing that, right? So how are they currently spending money to solve their problem? And that's one element of being able to start to set pricing. Another element is just value-based, right? You know that the problem is costing a certain amount of money. And if you can show a quick payback period because of the value that you're generating relative to the cost of what you're charging, you can also begin to get a sense of how much that you can charge, right? And so, one example is oftentimes the software is replacing or supplementing or helping a human. Well, how much does that human cost, right? Where there are humans involved in solving the problem, to your drone example, right? What were they doing at that time? I mean, I looked very early on at a company that was in Texas that was using drones, but it was just to do preventive maintenance on windmills. And that's because it was hugely expensive and risky with insurance to get a person to shimmy up to the top of the tippity top and so what happens is for preventive maintenance, you could put a monetary value on how much money that would solve, but there was just not enough preventive maintenance going on. And then the cost of either doing the preventive maintenance or the actual maintenance, right? So in that example, that founder was able to show us the literal cost to do as best as they could without the technology. But then on top of it, they were also able to show what the technology could do that wasn't even possible at this point. And this is one of the reasons that we love B2B, because it's so much more relatively simple than B2C, because it typically doesn't involve nearly as much emotion. Businesses buy for one of four reasons and only four reasons alone. And so when you're thinking about pricing and thinking about value proposition, you have to be thinking about why people buy. Businesses, and by the way, businesses don't buy anything, people buy. So when I talk about why businesses buy, I'm talking about the people inside of those companies who have real objectives that will measure them to determine whether they are fired, promoted, whatever. Make money, save money, keep or create a competitive advantage, or stay out of jail. Regulatory. Right? We love the regulatory value proposition, right? So right away, if you've done your homework and you're going intentionally to market, whether it is one or a few of make money, save money, stay out of jail, or create or compete or keep a competitive advantage. And now you can start reverse engineering either the opportunity cost or the real cost to do or not do those things based on their current sets of behaviors. And you can begin to sense a rough idea of what they're spending or what they're losing. And now you can start fitting in your price as a reasonable percentage of the savings, or showing them the payback period because of the money they're going to be making, right? Like one of our favorite attraction framework outbound campaigns is where you can say with a little bit of ROI, we help companies like yours solve your problem and pay for the cost of our product within X amount of time. Like the right person's going to lean in and want to get on the phone with you if you send them that email.
Yeah, I've been taking notes. I mean, you've been saying so many great things. I'm sitting here taking notes.
We're preaching the gospel
during my own podcast, which is awesome. I love that. This is such a cool experience, and I love this conversation because I'm very passionate about sales and go to market, and it's just what I love talking about. So sadly, we're going to have to transition to conversation, but let's transition to something I'm also very excited about, which is this region of the United States. Let's talk about Nashville.
Sure.
A lot of our guests and a lot of our focus, as we're building, our listener base purposefully has been in Kentucky, Lexington, Louisville. We've got to build that base. We're to a stage now where we're wanting to just branch out a little bit, put some testers out and see, can we grab some more audience? And we really wanted to test Nashville and talk about Nashville and shed some light on Nashville with people here in Kentucky because it's booming. I love going to Nashville to Broadway.
Oh yeah.
We love going to Broadway and to concerts and to games there and the SEC tournament. So we're very familiar with Nashville.
Remember those old days when you could do those things?
Yep. Remember very well. So we love going to Nashville for entertainment purposes, but I'm really looking forward to talking about it from a startup and technology perspective right now. First off, you talked about it briefly. What are you seeing in Nashville from a technology startup perspective right now? Amazon's moving in, so I'm sure that's going to be a big help as the years go on. But what are you seeing right now as far as Nashville goes?
Yeah. And listen, I'm definitely among the cohort of people that believe that Amazon being here is a great thing. Um, is 100% of what they're doing going to be great? No, but I mean, will there be some consequences? Some consequences to the economy and to pricing? Yes, but I think thoughtful, proactive, smart leadership, in the state, and in the city, can help minimize that impact. Most especially, and to me, most importantly, making sure that the wealth creation is not just being enjoyed by a relatively small number of people, but it's something that more people can enjoy. One of my strongest beliefs about technology and about the rise of entrepreneurism globally, is that it enables families to create economic security and communities to create jobs. And when that happens, you naturally find happiness and peacefulness follow. And so I think, as long as more people than traditionally have been able to enjoy the fruits of the benefits are enjoying it, to me, it really is nets out in a major positive way. The people that Amazon are recruiting here are not just going to work for Amazon the rest of their lives. Many of them are going to leave and take what they've been blessed to learn through Amazon and apply it to an early stage company, or they're going to join a local business and help them further grow, or they may join or start their own company. Um, you know, One of the things to me that's the most interesting about Nashville and attractive, which is why I chose to move my family here, is, I really do believe that, we have a density of entrepreneurs and population here that rivals, if not best, Silicon Valley. And though many of our entrepreneurs self-identify as songwriters, um, and studio musicians, or others in the music industry, make no mistake, that's the maker class. Those are entrepreneurs, even though they don't use that word. And so, in addition to, of course, the true entrepreneurs, that have, fueled, the economy here and created a massive amount of wealth in the health tech space. In addition to, because we are the Athens of the South, why the Parthenon was built here, right? Why did it become known as the Athens of the South? Because of so much education, so many colleges and universities, and not just Vanderbilt University and Belmont University and Lipscomb University, but we are also blessed to have two historically Black colleges and universities in Nashville. That's extraordinary, right? And so you have this constant influx of young, high energy talent that's being enabled by so many institutions with so many different types of skill sets to go in so many different directions. And because all that's happening at once in what you've suggested, which is definitely true, a very fun place where people live because they love it here, people aren't coming and leaving. It's for education. The sons and daughters and their spouses are moving home. The companies like Amazon, or others from New York City are moving here, and they're also bringing, the richness of their diversity, to mingle with the richness of the diversity of Nashville, just to create, a really exciting place to be. And all of that is really the nutrients that an ecosystem for entrepreneurs need. That's what goes into the soil to start that ecosystem starting. I mean, this place is awash with been there, done that experience. And the way that people think in this part of the country, very involved in their community. very deep roots in their community, people who believe deeply in investing and reinvesting in their community and are doing so in ways that now also include, you know, helping that, not just a technology class, that highly scalable business opportunity, but all types of businesses. And so my hope is that the narrative that leaks out of Silicon Valley won't necessarily infect Louisville and Nashville and Cincinnati and other places, that we can benefit from learning from what Silicon Valley has done for so long and where the density of it is being done, but we can make our own version of it. Even the word entrepreneur. I mean, guys, we're talking about a small business owner, right? The idea of a startup, that's just a small business. And so if we can kind of set aside some of those terms that take us more of in a fantastical or theatrical definition and direction, and just focus on small business owners looking to create jobs and build prosperity, and some of whom have an opportunity because of technology to do it at a massive scale, and just bring our resources together, both publicly and privately, to do that. I just think I think there's just a world of opportunity. I definitely think the governor in your state is doing that. I definitely think he's brought together a team in economic development that wants to do that. I've been having some really incredible conversations with folks, both in economic development in Kentucky, as well as with the people in Louisville, and not just Indianapolis. So I've heard it, right? I've had a conversations with so many founders in Louisville that feel like there's so many things happening outside of Louisville and Kentucky, but why isn't it happening as much in Louisville? But it is starting to happen. So part of it is just connecting it up. That's one of the reasons I'm so excited and so privileged to help in any way Jane at the Entrepreneur Center here in Nashville. Is she has done such a remarkably good job of bringing the cohesiveness to what had been a fairly disparate entrepreneurial ecosystem in Nashville. And that's so much of what needs to happen, is bringing it together and getting people rowing in the same direction, and not just sitting in co-working spaces or their homes wondering why they're the only ones, or wondering why there's not more folks doing it. And I guess the last thing I'll say is, the reason that we do what we do, and what we're seeing happen around the world now in the cities and the communities that we're privileged to be a part of, is more investment is coming off of the sidelines. Because the investment, the wealth that's currently sitting on the sidelines in Louisville, older money and different asset class money, when you ask them to show up to a pitch event that just seems more like it's Broadway theater than it is business development, right? When you ask them to invest at an unreasonably high valuation, and not only do they not get ownership, but they get a piece of paper that says you might someday get ownership, but maybe you won't, with a founder who can't answer the even most basic questions on who their customers are, and you wonder why the wealth is sitting on the sidelines. And so what we're doing is we're just speaking in the language of business and offering insights on how we're helping small business owners with highly scalable opportunities find their fit in the market, and investors can have an insight and inside information with which to trade on that early and benefit from it. Angels are coming off the sidelines.
Yeah, absolutely. That's all. We see a lot of that going on around this area as well. So thanks for sharing that with us. And I'm excited to try and dive more into Louisville, because it sounds like there's a lot of awesome stuff going on there. I've actually gotten to meet Jane through a common connection of ours. Right when I was trying to decide what my next move was going to be, I was considering Nashville, and got to talk to Jane about coming down there and getting involved in the startup community. So she is doing some great things down there through that Center for Entrepreneurship. But as we always do, we like to end on a forward-looking statement. So kind of give us the forward-looking statement on where you see Nashville going into the future as it relates to GrowthX and as it relates to just the startup and technology scene in general.
I think if I would boil it down to one thing, it's diversifying the hugely successful basket we currently have. There's just no questioning that there's a massive ecosystem of health tech founders and funders here, and that will continue to be one of the richest, most exciting places to build health tech companies. Now, how can we continue to add beyond health tech? How can we continue to capture music and not cede that to Los Angeles? How can we continue to build in just SaaS generally and capture other industries and sectors in the way that Chattanooga has done so successful with logistics? And so that's what I see. That's my forward-looking thought, is we're going to see Nashville continue to achieve the level of massive success that we've had in health tech, but in other tech-driven areas of startups.
Love that. Well, thank you so much for coming on here. Like we've said multiple times, this has been so valuable for Evan and I, who are both involved in startup and technology sales. So like I said, I'll be excited to go back and re-listen to this one. But again, thanks for coming on and sharing all this with us. This has been great.
Pleasure was mine, guys. I'm grateful for the opportunity to not only continue to get the two of you to, but be useful to your audience. And I really hope to hear from someone. So thank you both for the opportunity.
Absolutely. And if any of our listeners would like to get involved with GrowthX, what can they do to do that?
Best way is they can certainly drop a note to hello@growthx.com. They can check out mxponline.growthx.com. That's how founders find product market fit and we find investment opportunities.